And joining us to take the discussion forward is Amit Jeswani, founder of STALLION Asset. Good morning, Amit. How are you doing? It's been a while that we've chatted. Markets have been hitting record high for the last 6 consecutive sessions. A bit of profit booking probably entering in, tailing the global markets. I'm sure you've read the news flow around the small cap index where funds like Tata and Nippon, they've stopped accepting the lump sum investment coming into these funds, probably indicating more of overplay in small cap index. In today's session, small cap index probably is, trading flat. What's your view? You think there's more steam to the rally? And if yes, what are your picks within the index?
Good morning, Nikki. Good morning, everyone. And thank you so much for having me on your show. So, Nikki, we are bullish on the markets. The markets have made a new high. You don't fight the markets. The primary trend is, of course, very bullish in the market. Of course, the 10-year bond yield yesterday has moved above 4%. There's a 90% plus probability now that the Fed will hike interest rates by 25 bips in this meeting. So that there may be small 4, 5, 3, 4% type of corrections. But this is time, Nikki, according to me, this is time to think big and make it large. Bull markets are about changing net worths. It's not about playing 100, 200 points on Nifty. It's about how can you make it very, very, very large. And if you don't change your net worth in a bull market, you have got it wrong. If I don't change my net worth, I have got it wrong. If my customers don't change their net worth, they've chosen the wrong portfolio manager. Bull market's about how much can you make. And the next 1 year, according to me, things should be very good unless some unknown happens. We've gone through an 18-month kind of correction, and we've just broken out of that 18-20-month correction. Typically, after a 20-month period, whenever the market makes new highs, FIs have sold 4.5 lakh crores till March. They've bought 60,000, 70,000 crores now. There's a long wait for this cycle to go. Of course, there'll be short-term corrections. I can't time all that. I don't even waste my time doing all that. But the longer-term trend, the medium-term trend is very positive, and you want to make it large. What are we buying? We're chasing growth, and that is what we do all the time. And see these quarterly updates, these results updates which are coming, where HDFC Bank is growing at, let's say, 15%. This is not a recommendation. Me, my family might have vested interest. My people, my clients, everyone. So all disclosures there. These are not recommendations, but I'm just telling you how we think about it. If HDFC's bank is growing at 15%, we're not very happy. And we cut the salary of or our weights in our portfolio of HDFC Bank. And probably a Bajaj Finance, which has grown at 32% this quarter, looks like will grow at 34, 35% next quarter. That is where we add more weights, because we cut salaries where the employee is not performing well, and we give bonuses if the employee is doing well. And that is what we do every quarter. So that is what we've been doing, Nikki. It's a start of a quarter. We're starting afresh, and we will chase growth.
All right, chasing growth. And within, you spoke about large caps, essentially. You spoke about HDFC Bank and Bajaj Finance. But clearly, the whole party lies in the broader space. Talk about mid cap, talk about something like a small cap. Even stocks like Suzlon Energy have started doing well. Inox Wind have been doing well. What's your assessment overall?
See, there was an analyst meet 2 days back about Inox Wind, and Inox Wind says that revenues for Inox this year was 700-800 crores. And the expectation is that revenues will move from 700-800 crores to 4,000 crores. That is what the management, Jane, has said on the analyst meet in FY24. And if this happens, whatever he's guided, if this happens, you're seeing a multi-bagger in the making. So this will not go up one time. This will go up multiple times. If you believe in Jane, basically the promoter family of Inox, because they've delivered well. So their history is that they have delivered well on their promises in both Inox, which they sold to PVR, and in GFL, which is Gujarat Fluorochem. So both these businesses, they have delivered well. If you believe in this thing. So for the last 5 years, wind energy has been going through the most horrible cycle. And I'm surprised. And most out of 20 players, 15 are already bankrupt. Now there are 5 players left. three foreign players, Suzlon and Inox Wind. These are the players which are left in the wind energy space. And they have very strong order book. How many businesses do you think can move from 700 crore revenues to 4,000-5,000 crore revenues in 1 year? So we do not have positions here, but we are evaluating it aggressively. That what are the odds of? See, these are moonshots. And you can't allocate large sums of capital in these kind of bets, Nikki. But you allocate some capital. If things are going to, if it's going right, then you keep increasing your way up. And if they're not going right, then you cut your losers. Because if you get it right, you make multiple times. But if you get it wrong, you don't lose a lot of money. That is very, very, very important when you're betting on these moonshots.
Right. That's the approach also that Amit has suggested. Let's also talk about Idea Forge, where, it's a new kid on the block, which is going to be listed 100% kind of subscription, probably the record highs that we've seen for a drone maker company. What's your assessment on that? And within the IPO space, so for example, even Senco Gold, that's, mustered in quite some interest from the investors. What's the hottest pick for you within the primary markets?
So I don't track Idea Forge so well, so I won't be able to comment. But Senco, the valuations are very attractive at 13, 14 times. The pricing is attractive. So I don't know if I'm going to hold that business for a long period of time or no, but in my humble opinion, I can be wrong, of course, you should get a very large listing gain. The pricing of the IPO is very, very, very reasonable. The business is mediocre at best, but it's a localized play focused on West Bengal. But it's a decent business, and you're getting it. It's a decent business and very reasonable valuations. Because see, Kalyan also, when it came at 25 PE, but now Kalyan's moved to 35 PE plus. So here, if the business gets it right, you'll make a lot of money. If the business doesn't get it wrong, you still don't lose a lot of money. So those are the kind of bets. See, these are mediocre kind of businesses. These are not, you can't compare a Senco to a Titan. Like Titan is at 80p, but there's a reason why it's at 80p, because it's consistently grown. It's a market leader, consistently grown, and this quarter was also decent. Like Titan also, we might have vested interest here, but Titan numbers till 8:30 in the morning looked very good till the time Kalyan Jewellers numbers came. Like Titan grew at 21% this quarter, and I was very happy till 8:30 in the morning today when I saw Kalyan Jewellers growing at 30% plus this quarter. But regardless, Titan is a very decent business. Those are longer term businesses, but Senco can be a decent bet for investors. The valuations are very attractive. And in a bull market, even mediocre businesses get very decent valuations. So you don't have to worry too much.
Since you have spoken about Titan, the question was whether Titan's premium valuations could sustain and are justified at this point of time or no. The fundamentals remains good for this company, like you just suggested. There are institutional investors which have parked their money within this industry leader. But you just compared Kalyan Jewellers with that of Titan and probably gave out a growth comparison between the two, at least for Q1. But let's talk about valuation. What do you think about it?
So see, Titan, like this is has moved from 20. Titan's revenue in FY 2020 was 20,000 crores. And by 2023, in a 3-year period, which was hit by COVID, they doubled the revenue and the revenues were at 40,000 crores. This year, it is expected. So it doubled revenue in COVID period. If you fundamentally compare it to any other retailer, like DMart, the growth of revenue was 72%. Okay, it was FMCG, yet growth of revenue. You compare it to most apparel retailers except Trent. Trent has grown at 120% pre-COVID to FY23. See, and that is why Trent and Titan in the retail category are way above most other players. We have vested interest in both of them. I'm just saying it. You are chasing growth with a large terminal value. You need great businesses, but they need to also grow very fast. Like DMart's growth, I'm just speaking retail in general. DMart's growth was below 20%, was at 18, 19%. DMart is not, you don't pay 100p for 19% growth. Coming back, Titan is not cheap anymore. It was cheap when it was down 30% probably from here at 2,300 rupees. Right now, it's not cheap. Titan is trading at 65 times FY24 right now. The range of Titan, see, all stocks move in a range. Like Nestle moves in 70p to 90p. All these stocks, all these consumer stocks, like DMart moves from 90p to 110p typically. Titan also moves at from 1 year forward term from 55p to 70p. That is the range of Titan 1 year forward for Titan. So you're right now at 65 times FY24. You're on the higher side of the valuation curve for Titan.
Higher valuation clearly, but if you talk about the stock gains, 2.5% uptake coming in for Titan and Kalyan Jewellers too. Like Amit indicated, the growth started looking better off for Kalyan Jewellers, 4.5% gains coming in for Kalyan Jewellers with the Q1 update out there. Let's talk about auto. Maruti Suzuki hits the 10,000 mark, homecoming for the stock after 6 years. 2017 was when we saw Maruti Suzuki trading around those levels. There have been a couple of rejig in the strategy. They're focusing more on UE. There are a couple of launches also. How are you looking overall at the auto basket and the valuations? And within that, what's your pick?
So, Nikki, we like to use a play in the auto ancillary space rather than going for the OEM players, at least for now, because, see, there is competition and coming very aggressively. If iSure was doing decently well and doing 30% margins, you had Harley Davidson. And so it's a red ocean out there, I believe. Like companies, these are not recommendations, but companies like Minda, they're moving by kit sets. And example, they used to sell only lighting. They have started selling sound, like acoustics. They're selling switches. So they're selling many other things, many other components in the vehicle. So they are increasing their ticket value per car or per two-wheeler, that this kit is 40,000. Don't just buy my my mirrors or my see, there are some guys who are selling mirrors, some guys who are doing forging. If you can sell it as a kit, the entire basket, that's the kind of business that will make it very, very, very large. And you want to bet on auto ancillaries because OEM space right now, like this is what I think is red hot competitive. There are no new players entering and there is also a threat of EV. So who's going to make it large in the next 3-4 years as the pivot happens from ICE to EV? I don't know. These are very early stages. I know someone will make it very, very, very large. It's going to be dominated by software. See what has happened in the US markets, the way Tesla is doing. I get very scared. Like Tesla is now selling 4.6 lakh cars a quarter, and that boom sometime will come in India. So out of 1.6 crore two-wheelers that were sold in India, 1.6 crore two-wheelers that were sold in India, 7 lakh was EVs. That is, you're looking at a small percentage, like a 5% kinds. Now, this will move to 100% for sure in the next 3-4 years. And you want to see players there. Even on the two-wheeler side, that game is going to change. In the four-wheeler side, the game, not in 2 years, probably in 4 or 5 years, that game will also change. And you want to find the newer winners there, or the same winners, same companies make it large. So very early days, and there is disruption which is coming in this sector. That is for sure. You don't know who's going to be the future winner. So when we are very confused on the 5-year period, we don't play it for 6 months also, or 1 year also.
But Amit, within the US market also, I was listening to that interview for Elon Musk where he suggested that, it's just Ford and Tesla right now within the US market which have been profitable. The struggle is real for the auto industry market and the US market. How comparable are the two industries here? I mean, Indian automakers is compared to the US market. That's one. And B, are you just saying that the companies which are focusing on EV probably would be the one that would be leading the whole rally out there for the basket?
So I'm saying let's not focus on the auto OEMs at all. I'm saying let's focus on the auto ancillary part, because the auto ancillary players are the lowest cost guys. See, there are some things which are too tough to analyze, and the good part about us, Nikki, is that we have to own only 20-25 stocks in our portfolio. And we select the highest conviction 20-25 names in the portfolio. Right now, we are more convinced on the auto ancillary space because there the growth. So if you look at even Minda, the revenues have doubled in the last 3.5-4 years. Except TVS Motors, no other the auto company has been able to manage that kind of growth. So be it Minda, be it we don't have Sona Comstar, but that is also, these are the two players I would say they have high growth, high ROIC, market leadership, and a very large opportunity in front of them in the auto ancillary space. And then there are smaller players like Pricol, which are market leaders in the DIS systems. DIS is where the largest change is happening. There are only two players in DIS, Minda Corp and Pricol. Pricol, of course, there's a fight going on, but DIS is where your driver information system, you see any car, you would buy a car not just based on design anymore, it's design plus that driver information system. And this is where it will work like a software as a service. We are also evaluating recommendations, companies like MapMyIndia. While we're not very big, so that company is on their investor meet, they are speaking about 40% growth. That out of 20 crore cars which are there in the roads, they have about penetration in 19 lakh cars, and Google cannot be inbuilt in cars. So every time you buy a MG Hector or any car, MapMyIndia makes money and your costs remain the same because there is no incremental cost. So if you sell to 100 people or you sell to 1,000 people, your cost is going to be the same. So there are benefits of scale. So we are looking everywhere but we are more focused on the auto ancillary part, Nikki, not on the OEM part. That is where we think there is too much disruption coming. And let's see who wins. What's the hurry?
Interesting conversation, Amit. I'm just going to leave it at that. And thank you for taking out the time for, this interesting conversation around the corner.
Thank you, Nikki.
All right, pleasure. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.